Hello, welcome to my class. I'm Srinivasan, and today I plan to take you all to a wonderful journey about gold, and also about the recently notified scheme by the RBI about the sovereign gold bonds. So let's see what gold is all about. So, so when we talk about gold scheme, let's quickly understand what gold is. Gold is a very, very irresistible commodity, as everyone knows. And the lust for gold has been there from times immemorial. Now, as per the Indian Chamber of Commerce, the annual demand of gold in India is approximately in the region of 700 to 800 metric tons per annum. In fact, last year, the demand of gold was almost 690 tons. The gems, the jewelry, and the lifestyle industry, which is connected with this precious metal, an industry which contributes about 7% of India's GDP and employs almost about 5 million people. These statistics itself tell you how important this industry is and how important gold is. Now, gold has always been playing a central role in our country's culture. It has always been considered as a store of value. It represented a symbol of wealth and status and was a fundamental part of any and many rituals. I could give you an example. For example, in case of death, the priest usually advised the aggrieved family to donate 2 or 3 or 4 grams of gold so that the soul of the dead person may rest in peace. So gold is one of those irresistible asset class which finds buyers right across the spectrum, from the lower middle class to the middle class and to the rich class. So when we talk about gold, basically, and if you're interested in purchasing gold, you have 3 options before you. You could buy gold from a jeweler in a physical form. Of course, you need to take care of whatever requirements his sale would require. A transaction in gold requires certain uh, basic documentation, so you need to fulfill that. Or what you could do is you could invest it in an exchange traded gold funds. Now we will talk about it shortly. Or you could invest it in a sovereign gold bond funds. So when we talk about physical gold, it's very easy to get. You just walk across to a jeweler and buy it after paying the money. But when you want to get into ETFs, that is the gold exchange traded funds, they are very simple investment products that combine the flexibility of stock and the simplicity of gold investments. The ETFs are traded only on the cash market of National Stock Exchange, like any other company stock. They can be bought and sold continuously at market prices. Now, gold ETFs are basically passive investment instruments that are based on gold prices and invest only in gold bullion. And because of this direct pricing connect, there is complete transparency on the holding of an ETF. And further, due to its unique structure and creation mechanism, the ETFs have much lower expenses as compared to physical gold investments. So having said that, I would be now coming to this particular scheme, which RBI has notified, in fact, rolled it out on 13th of April 2020. And this particular scheme is titled as Sovereign Gold Scheme 2020-2021. Now, the methodology I have adopted to explain this particular topic is I have involved a Q&A format. So I will be asking questions and I'll be answering. So this way, the concept will become very clear to all the students. And we will also take an example, like how would you go about buying a sovereign gold bond? Okay, so let's get started. So first, let's understand that the sovereign gold bond scheme, which was released and notified by the Reserve Bank of India, is going to be issued in 6 tranches. So, I mean, you could tell me that a simple way of defining tranches would be, you could call it as 6 different phases. So when I say 6 tranches, each of these tranche will have a subscription date, and each of these tranche will have an issuance date, which means there is going to be subscription post which the bonds would be issued. So when I say 6 tranches, it is Series 1, first tranche, Series 2, tranche 2, Series 3, tranche 3, Series 4, tranche 4, Series 5, tranche 5, and Series 6, tranche 6. The entire tranches would commence in the month of April, and the entire issuance under this particular scheme would get over by second week of September. Having said that, let's see the details of the scheme. So who issues this SCG? That is, who issues this sovereign gold bond? Well, the answer is the Reserve Bank of India on behalf of Government of India. So why should the Government of India want to issue a gold bond scheme? The reason is very simple. The government, in view of this COVID pandemic, may have thought of coming out with a scheme and mopping up cash resources from the public, because the moment there is a lot of doubt, there is a lot of insecurity in the market, investments do not flow into bonds or equity markets. People would be actively investing only in gold, and perhaps the government thought it wise to issue sovereign gold bonds. Okay, who can subscribe? Well, resident individuals. Resident, you and me. HUF, Hindu Undivided Family, Trust, universities, and charitable institutions. Okay, so now when we talk about investing in this bond, so what is the denomination? So the basic unit is 1 gram of gold. So you could purchase 1 gram of gold, or you could purchase in multiples of grams. And if you invest in this gold bonds, the tenor of this bond will be 8 years. And you have an exit option after 5 years. But these exit options can only be exercised on the interest payment dates. So which means the investment size is 1 gram of gold. There is also a maximum limit per financial year. An individual cannot invest more than 4 kgs in gold. An HUF cannot invest more than 4 kgs in gold. Trust and other similar entities can invest up to 20 kgs of gold. So the next question is, can it be held jointly? Yes, of course, it can be held jointly, in which case the investment limit applicable would be that which is applicable for the first applicant. So supposing there is A and B, so A can hold 4 kgs of gold. That is the maximum limit. The bond does not believe in clubbing the holdings of both A and B. And this is very, very important. Now, issue price, of course, we spoke about the denomination in 1 gram of gold. So how is it, what is going to be the price of gold? Very simple. This will be based on the prices published by the Indian Bullion and Jewelers Association. The price is nothing but a simple average of the closing price of gold for the last 3 working days of the week preceding the subscription period. We will understand this by means of an example. And the closing price of gold would be 999 point gold, 999 carat gold. So that is the purity of gold. Can you purchase this bond online? Yes, of course you can. And if you do that, there is a slight discount of 50 rupees per gram for online subscription and digital payment. And how are you going to make payment? Well, if you're going to subscribe to this by only cash, then the maximum amount that you can subscribe is 20,000 rupees. But if you're willing to give demand draft, checks, electronic payments, then of course that other limit of 4 kgs would be there. And how is the bonds issued? In the first phase, the bond is a physical bond certificate will be issued to you, and you, at your discretion, can get it converted into a demat form. What will happen after 8 years? Yes, after 8 years, it would be redeemed at a price again which is quoted by IBJ, that is Indian Bullion and Jewelers Association. Again, it will be the previous 3 working days average. How are you going to get this? So you could approach the commercial bank, stock holding corporation, designated post offices, recognized stock exchanges, which can be either directly selling to you or through their agents. And if you hold this particular investment, you are entitled to an interest of 2.5% per annum, which is payable semi-annually on the nominal value. Can you get loan against this bond? Yes, of course you can. These bonds can be used as collateral for the loans. KYC documentation, yes, you need to adhere to KYC documentation in terms of your identity proof, your address proof, you need to provide PAN card, you need to provide whatever documentations are required under the usual KYC framework. Tax, yes, the interest that you earn from these bonds would definitely be taxable under the Income Tax Act. Of course, capital gains would be exempted on redemption for individuals. The other big advantage is these bonds are tradable in stock exchanges. That means within 15 days of its issuance, it would be listed in the stock exchange and you could actually trade in these bonds. So in short, supposing you are interested in subscribing to this scheme, all you need to do is on that particular subscription date, go to the nearest commercial bank or go to the designated post office, get the form, fill it up, find out how much grams of gold you would like to subscribe to. And let us say you plan to subscribe 1 gram of gold. the commercial bank, the designated post office would tell you what is the price of gold for 1 gram. And this particular price would have been worked out on the basis of the simple average for 3 days of the previous week of this subscription week. So let us say that is 3,000 rupees and you plan to subscribe for 1 gram of gold. So you need to pay 3,000 rupees. And this particular application will be processed, and within 4 days of the closure of the subscription, you would get a certificate, a bond which mentions that you hold 1 gram under the Sovereign Gold Bond Scheme 2021. Now, every year, you would be entitled to an interest on this holding. Now, the nominal value in this particular example, which I gave you, was 3,000. And at the rate of 2.50%, at the rate of 2.50%, it works out to 75 rupees. And this 75 rupees would be paid 37 rupees 50 paise, 37 rupees 50 paise semi-annually. And in case you need any loans, you could very well use these bonds as collateral. You could sell off these bonds at any time because it is tradable in the stock exchanges. But if you were to hold, and if you were to get it redeemed at the end of 8 years, then whatever capital gains are there, you will be totally exempt of that. But supposing you have bought the bond in the secondary market and you have held it till redemption. Now, in this case, you will be entitled to indexation benefits. I think with this particular example, I have more than clearly explained what Sovereign Gold Bond Scheme 2021 is, and I'm sure you must have understood. If there are any questions, please write to me, and I will endeavor to answer your questions. Thank you so much. See you.